Grant off Chapter 4, Revenue Recognition Part 2. Take a moment to look at the coverage of this video. Fines and forfeits. Fines are amounts assessed by the courts against those guilty of statutory offenses and neglect of official duties. Forfeits arise from deposits or bonds made by contractors, accused felons, and others to assure performance on contracts or performance in court. Accrue if the amount is known prior to the receipt of cash, which usually is not the case. Refer to the example on pages 157 to 158. Recognition standards. Government-mandated transactions. Revenue from these transactions should be recognized when all eligibility requirements, including time requirements, have been met. For example, mandatory drug and alcohol abuse prevention program for the school, the DARE program in public schools. If the grant is a reimbursement grant, then recognize when qualifying expenditures have been made by the recipient organization. And our focus in this course is with the reimbursement grants. Voluntary non-exchange transactions. Revenue from these transactions should be recorded when all eligibility requirements between two willing parties, including time requirements, have been met. For example, state reimbursement to schools for a portion of special education costs incurred. The reimbursement grant is revenue when qualifying expenditures have been made. We just talked about that. Intergovernmental revenue. Either government-mandated non-exchange transaction or voluntary non-exchange transaction. Intergovernmental revenue includes restricted grant, unrestricted grant, which is not common, contingent grant, entitlements, shared revenues, payment in lieu of taxes. Often the amount is known before the actual receipt of cash and thus may be accrued under the modified accrual basis. Example, see pages 164 to 166. Pass-through grants. Grants a government must transfer to or spend on behalf of a secondary recipient. Gaspy stated that as a general rule, cash pass-through grants should be recognized as intergovernmental revenue and expenditures or expenses, depending on the fund, in governmental, proprietary, or trust funds of the primary government and in government-wide financial statements. If the government acts as a cash conduit, merely transmits money without having any administrative involvement, then these grants are reported in agency funds. And you can see that a big example of just a conduit, a pass-through, is food stamps. Exchange transactions. Transactions in which each party receives value essentially equal to the value given. One party sells goods or services and the other buys. Recognize the revenue when it's earned and the expense or expenditure when it is incurred. Exchange-like transactions are those in which the values exchanged may be related but not quite equal. In exchange transactions, a government provides goods or services to the provider in return for resources received. License, permits, charges for services. In non-exchange transactions, a government receives value without directly receiving or giving equal value in exchange. Most state and local government transactions are non-exchange. License and permits. Primary concern, should the revenue be recognized when the license is issued and cash received, or should it be spread out over the period covered by the license? Characteristics of license, exchange transactions, license fees which cover the cost of services provided. Non-exchange, license fees that bear little relation to the cost of services provided and are imposed mainly as a source of general revenues. License fees are generally non-refundable. These include items such as vehicle licenses, business licenses, liquor, marriage, animal licenses, building permits, zoning variants, etc. Fees for licensing and permits, passenger facility charges, tap fees, and certain developer contributions should be considered exchange rather than non-exchange, even though the party making the payment may receive less in value than it surrendered. And this will continue to come up, especially when we get to our chapter on proprietary funds. Charges for services. Many governments have shifted much of their revenues from taxes on all taxpayers to charges to recipients of services, including charges for recreational services, building inspections, and so on. Accrue if the amount is known prior to the receipt of cash. Miscellaneous. Revenues that do not fall into one of the other categories. Proceeds from the sale of government assets, investment income. In general, accrue if the amount is known prior to the receipt of cash, but usually accounted for when collected in cash. So we have our work cut out for us in Chapter 4 in dealing with all of these different types of revenues. So our summary: primary objectives of financial reporting, inter-period equity and budgetary compliance. 2 types of financial statements prepared, fund and government-wide. GASB Statement Number 33 provides guidance for revenue recognition and is applicable to statements prepared either on the full accrual or the modified accrual basis. This standard statement sets forth revenue recognition requirements for, and you can see the list, items that we have covered.